Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome to Financial Issues. We're so glad that you joined us on this Thursday morning. We've got a lot to share with you guys. We're going to be talking about some of the recent data in home sales and the housing market that we've seen recently, and hoping to get around to answering a lot of your questions. We seem like we have a few more questions than usual, and that's good. So that means more people are listening, more people are being encouraged to be biblically responsible investors and to be good stewards with all that God has trusted them with. So we hope that you will consider becoming a partner or an avid listener or supporter of the ministry, because we are partner and listener supported. So you can find out more about our ministry at financialissues.org. But in a nutshell, our mission is to defund darkness by teaching you how to be a biblically responsible investor, empowering you to become your own portfolio manager and screen out the companies who are using shareholder dollars to fund darkness. And secondly, to fund the light, to encourage you to be a joyful and generous giver, reminding you always that everything we have belongs to the Lord, and we should, as an act of obedience and gratefulness, return to God what He asks of us. So find out more about our ministry at financialissues.org. Sign up to become a partner while you're there, because you're not going to want to miss our partner conference call that is happening today, and you can get in on that partner conference call if you join now. So go to financialissues.org. If you're a partner, you would have already gotten the login information for the partner conference call today. If you are just joining or didn't get the email, you can find that information on our website as well, financialissues.org, resources tab, I believe, and partner conference calls. Our stewardship verse today comes to us from 2 Corinthians 8:9. For you know the grace of the Lord Jesus Christ, that though he was rich, yet for your sake he became poor, so that you may by his poverty become rich. That's sort of a conundrum, right? That stretches our thinking in a way, and it really redefines for us what rich and poor really are in a totally different way.
Yeah.
Normally totally different than what we think of when we think of rich and poor.
Yeah.
What do you think, Seth?
It's a beautiful gospel verse, Shana, but you're exactly right. It is a little baffling when we think about it. Christ did become poor indeed on our behalf. This is describing when he left his throne in heaven to come to dwell with us, dwell among us, become one of us. And we are, in fact, the definition of spiritually impoverished. So he left his riches, as it were, to become poor, become one of us. And because of what he's done for us, we're now adopted into his family. And so we become truly wealthy, not because of anything that we've done, but because we are now sons and daughters of the one who is ultimately truly wealthy, which is God himself, and we're beloved by him. This is great news, Shannon. This is the good news. So nothing more we can say except praise God.
Absolutely.
Yeah. Yep.
And it is possible to become rich in terms of human understanding, but to be spiritually destitute.
That's right.
So if you find yourself in a place where you're spiritually destitute, our highest priority, even though we talk about finances, financial issues here on our program a lot, our primary concern is for salvation for your soul. So you can find out more by going to our website, clicking on the resources tab. We have a hidden gem there. It's not really hidden, but most people aren't looking for it when they go to look for financial issues. But it's called Do You Want to Know God? If you click on that, you can find the most valuable piece of information on our website. Well, I guess let's turn our attention to more trivial matters, some financial issues.
Yeah.
Well, on Tuesday, we got the Case-Shiller Home Price Index report that came out, and it continued its march higher. So if any of you have been in the home buyer market, you are probably astounded at what prices on real estate have done over the last several years. The price of a home has gone up somewhere in the neighborhood of around 40% in the last few years, and it doesn't look like it's going to well, it's stalled out. It's not going up as much, but home prices rose again in the month of June by 0.6% month over month. If you're looking at the yearly number, home prices are 6.5% higher than they were just a year ago. Now, that's welcome news, I guess, for existing homeowners who may want to sell their homes. But if they're selling their home and going to something else, it's really kind of a sideways move. And it's a really tough financial situation for those first-time home buyers. And it wipes out any relief that lower mortgage rates have provided to home buyers. So, we've seen mortgage rates come down. I think they peaked out. I think the highest I saw them was right at 8%. So sitting at about 6.5% right now, I heard has really caused not a surge in home purchases, but in refinances. So I guess it's getting into that territory. If you were unfortunate enough to get a mortgage at 8%, refinancing at 6.5% is, I guess, better. I think if you wait though, you'll probably see an even better rate in mortgages in short order.
Yeah, and Shanna, it was interesting. It's kind of speaking of that, I saw a recent headline here. Record 60,000 home purchase agreements were canceled in July, and that's actually amounting to 16% of all homes under contract right now. So this specific report that came out states that while existing home sales rose slightly last month, they were nevertheless the lowest July level on record. As you mentioned, that 30-year mortgage rates dropped right around 6.5%. There's some news that potential buyers are citing some concern about the upcoming election, of course. We're hearing that again, and the high cost of homes in the survey as well. The median sale price of a home, Shana, has increased 4.1% year over year. In July, it's right around $440,000 is the median home price. Just crazy stuff. So my question for you is, what do you believe is on the horizon for the housing market?
Yeah, I'd like to really dig deeper into that number and really see what the reasons are, because, how do those deals fall apart at the last minute? It's either because the financing didn't come through, so it makes me wonder if credit is tightening a little bit, or if it's that other thing that was mentioned in the article that people are just really concerned about the economy and the election. Yeah. So I think many are expecting interest rates to drop further next month when the Fed I'm sure is going to cut, and I think by 50 basis points. I don't know if I'm in the majority yet there or not. I've been in the minority, but I'm sticking to it. I don't think prices will go down that much, though. I have heard some housing experts that probably are much more versed in the home markets than I am, saying that they think home prices are going to come down. But the fact of the matter is, we still have a shortage in homes because there just haven't been as many homes being built as there are people looking. We've had an influx of illegal immigrants into our country, somewhere, I guess, to the tune of 10 to 20 million or more. We don't know, because we haven't really done a good job of keeping track of that. I guess it wouldn't be hard to figure out. Follow the money, right? That's right. There you go. But I won't go down that rabbit trail today. I just don't think prices are going to go down as much as people think that they will until we start seeing some more homes built. But I think that lower interest rates will help with that. I'm in the same boat as a lot of these people. We've been on the verge of building our own house for about a year now, and we're right at that in process where we're about to close, and I'd be lying if I didn't say that we've had a little bit of cold feet, tossing around, waiting until after the election and things like that. But so I get it. I understand where these people are coming from, but I also can't help but wonder how many of these might be first-time home buyers and are hearing about Kamala's plan, or what she says that she would do, to give $25,000 to first-time home buyers. That's just amazing to me. I don't know if we've got time to put up. There was a couple of charts that we had showing these numbers, and one of them showed that what is actually, and I'm a visual person, so I like to see the charts, but it shows how much home closings have fallen just over the last couple of years. It's just kind of amazing when you actually see that, and then to see the home deals that have fallen through, 4 times since 2020. Home deals are falling through at the same level that they are right now. This is the 4th time. Well, folks, we got to take a break, but we're going to come back with more financial issues after the break and get to some of your partner and listener questions. So don't go anywhere.
I just love the first book of Exodus. The king says, the Jews are too many. Get rid of them. I command you to kill the firstborn. But the midwives to the Hebrews heard the order, and what did they do? They defied it. And God dealt favorably with the midwives and gave them families. He blessed them for loving life. He blessed them for saving babies. We have re-entered the death cult in this country. You think about how much we elevate death, whether it be the chopping off of parts and we call it transgender care, whether it be shouting our abortion, and you see it so beautifully in John 10:10. It is the divide of the entire scriptures. Now, most people would say John 3:16, but think about it. The enemy has come to lie, steal, cheat, and destroy. I have come to give life, and life more abundantly. That's the whole ball game, everybody. It is everything. And we have to have the joy of Jesus Christ to enjoy life and to protect it. It's a gift from above. And Preborn is leading the charge.
How is Timothy Plan continuing to lead the fight as you guys now enter your 4th decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Welcome back to Financial Issues. We're so glad that you tuned in today. Well, we've got sort of a backlog of questions coming in. That's great because it means people are listening and are engaged and are interested in honoring God and being a good steward. Well, Seth, what's on deck?
Yeah, let's do it, Shana. Start with Karen, 66 years old. Based on Shana's advice, she's saying, concerning averaging down in stocks, I have a question about UT66. I'm down about 40% in this stock. It's offering about 7% dividend, seems to be on an upward trajectory. I have room for more utility stocks. Would this be a good time to average down? And by doing so, I would be about 3% in the stock, and I'm in the 65 and up allocation model. What do you think for Karen?
That's sort of a tough one. You could, as long as you're not going over that 3%. She's in the 65 plus. Yeah.
Yeah, she is.
And as long as you're not close to the top of the utility sector, we are working on the asset allocation models, and utilities is one that may be on the chopping block, not drastically, but utilities may get a little bit of a haircut. So I would be fine in you going up to 3% in that stock, but if you're close to the top of your sector allocation, I would maybe wait.
Good stuff, Shana, as always. Next one up is a partner who goes by the name of Miss Jolly. She is not a partner. Actually, I apologize. I said she's a partner, then she's not. She's not a partner, but she's looking for some help here, Shana. She's 74 years old. She's a widow on Medicare with my secondary insurance with United Healthcare through AARP. I've heard AARP supports Planned Parenthood. Is this true? I don't want to support any company that is not aligned with the biblical worldview. What do you think?
Yeah, I wouldn't either.
Yeah.
So I did a quick search on that. I couldn't find any evidence that they do support Planned Parenthood, but I can't say definitively that they don't either. But AARP does seem to support some things that are not really well aligned with the population that they claim to serve, like supporting some different legislation in the past. And I'll say this too, though, good luck trying to find an alternative provider in the traditional insurance market when it comes to insurance companies, because they're, if you're screening them for being biblically responsible, they're all dirty. So they're all kind of involved in things that you wouldn't want to support as a Christian. Now, I will take this opportunity though to highlight kind of the difference between patronage and ownership. So we are advocates of screening out companies from an investment standpoint, because whenever you own a stock, whenever you purchase stock, you become an owner of that company. So I believe that you still have stewardship responsibility when it comes to what that company is doing. Now, you don't get to make the day-to-day decisions about how that company is run, whether or not they decide to support Planned Parenthood or, some other agenda, but you do get to decide whether you continue to own them or not. And I believe that you have stewardship responsibility. Now, there's a difference between investing, which is what I just described, and patronage. So patronage is when you buy a product or service from a company. So when you're buying a product or service from a company, most people think, well, I don't want to give them my money and then have them in turn support those things. Well, sometimes it's almost impossible to avoid. Like if you're going to buy a computer, are you going to buy, are you going to use Apple or Microsoft? Well, you probably have to use a computer. You probably don't have a choice when it comes to that. And there's not a clean alternative. And so the thing that makes sense to me is that whenever you're buying a product or service, you're exchanging the money that you have stewardship responsibility over for a good or service. So you no longer own the money. The stewardship responsibility then becomes that of the company that now has it, that sold you the good or the service. Your responsibility is now in stewarding the product or service that you have, and the money is the responsibility of those that you gave it to. So I would say that in your case, there is a good alternative that you should check out. If you've never considered health sharing, I certainly would at least look into it. The ministry that we use for health sharing here at Financial Issues is Samaritan Ministries, and you can find information about them on our website, financialissues.org. And they do offer a way to supplement your Medicare. So you could maybe go back to just original Medicare and consider using Samaritans as your supplement.
Good stuff, Shana. Thank you for that. Next one up is Joseph. Joseph is a partner, and he's wondering about CD 58. Is this still a hold, being down about 40%? Joseph is 72. What do you think? It
is, yeah. So you haven't missed any sell alerts on that. I think that if Kamala were to get elected, I think that company sells things that a lot of people would want to own.
Yeah, that's right. Yes, for better or worse, right, Shana? Yeah, absolutely. That's good stuff there. Next one up is Caleb. Caleb has 2 custodial accounts for his 2 sons. His brokerage is through a rather large brokerage company. Each of them has about $1,800 in the GE stocks. I want to move that full balance to a Timothy Plan mutual fund. There are several on the buy list. Do I pick one mutual fund, or should I pick several and split the percentages between them? My plan is to leave the money in there for 8 years until the account is theirs, and then add money on occasion. Do you want to answer that one first, Shana? I know he has a follow-up there as well.
Yeah, sure. Sure. So I think this really has to do with the diversification of what's in it. It says GE stocks, so I'm not sure if that just means the stock GE or a mutual fund. If it is just the stock, I would opt in favor of having something a little bit more diversified rather than having all the money in one company. And that particular company, I don't believe is biblically responsible. If you want to check me on that, you can go to our website, financialissues.org, click on the resources tab, and go down to evaluator. That's a way that you can check your investments to see if they're biblically responsible or not. So you can put in if that is in fact GE stock or whatever investment it ends up being. You can see if it's biblically responsible or not.
And so Shana, not to take the fun away from Caleb, but I did just run it through. It is not biblically responsible.
Okay.
So
good.
Yeah.
So I didn't think it was, but there is, I think, a subsidiary that was spun off of it that is or was on our broad list that is biblically responsible, but that one's not.
Yeah.
Okay. So what I would suggest if you want a one holding that is diversified is to look at ETF number 1. And the best thing about that, it is biblically responsible. So it is an ETF that was put together by the Timothy Plan. Timothy Plan is is the pioneer in biblically responsible investing. We just celebrated their 30-year anniversary in existence, and they are completely sold out for biblically responsible investing. They created the company Evaluator that is the screener that I just referenced, and so they've spent a lot of time and money researching these issues and continue to research them on an ongoing basis so that we can actually do biblically responsible investing. So ETF 1, if you're a partner, you'll be able to see which ETF that is.
Awesome. And then his follow-up question, Shana, is should I leave this account in this particular brokerage and move the accounts over to Fidelity where I already have my own investment accounts? The accounts here were set up as a gift by my grandparents for me to manage a custodial account for my boys. So just wondering if he should consolidate, I guess.
So we have had a lot of feedback about that particular company that they do not buy into the whole biblically responsible investing philosophy. So if you leave it there, you could probably expect them to give you some pushback. Now, maybe not. I've heard of isolated cases where advisors were really convicted for biblically responsible investing. Still trying to work there and come up with some ways to do it. They shouldn't have a problem buying stock for you at all. So they shouldn't have a problem, or at least not a logistical problem, in purchasing that ETF if you requested that of them. Now, I don't know what kind of response you might get back, but if you're at Fidelity, if you're already familiar with the platform, I would suggest that it would be just as easy to set up an account there with the same registration that it currently is and move that over.
Awesome, Shana. Next one up is David. He's 64. He plans to work another 3 to 4 years due to Bidenomics. He's wondering, is it too late for me to transfer my traditional IRA to a Roth? I have about $700,000 or $800,000 in my traditional right now. He loves the show, loves all the crew. Thank you for that, David. What do you think, Shana?
Yeah, great. We love you too, David. Thank you for listening and supporting the ministry. Yeah. So it's not too late. We have at least this calendar year where we're going to be under the same tax code. Now, I wouldn't consider doing the whole ball of wax, the $700,000 or $800,000. That's going to put you in a really high tax bracket. But I would be strategic in the way that I planned. If I were you, I would first of all try to add up all of the income that you think that you're going to have in 2024, and then also look at the deductions, whether you're going to take the standard deduction or whether you'll be able to itemize and come up with a taxable income. Then look at the taxable income brackets. I would consider going up to the top of the 22% bracket in a Roth conversion. Now, you're going to have to know that if you've never had a Roth open before, you're going to have it open for 5 years before you qualify for all of the tax-free benefit that comes with a Roth. But that shouldn't be a problem. You should be able to fund your income out of the traditional IRA, which would be better anyway once you retire, especially if you're in a lower tax bracket. It would be better to start taking income from the traditional rather than the Roth, and just waiting till the time the Roth is going to be a much bigger benefit to you as tax rates go higher. So you want to be aware of a little limit called IRMA. There's a limit for income. You're definitely going to want to check that out. You would bump up against it just over the top of just over the threshold of the 22, going into the 24% bracket, and that can really impact your Medicare Part B premiums. So that's why I say you'll probably want to just consider going up to the end of the 22.
Yep, good stuff there, Shana.
Yeah, just for accuracy, if you use a tax professional, it would be a good idea to have them put their eyes on your calculation and make sure that you're, not harming yourself in any way.
Yeah, absolutely.
That's all we have time for today?
I think so. That's it.
Well, folks, I hope that you'll join Seth for Bible study tomorrow morning. Go to financialissues.org, click on resources and the Bible study, and you can find out how to join in tomorrow morning. If you listen on a outlet that only carries the short version, make sure you get our phone app. That's going to be very important for making sure you get the show when and where it's convenient for you. For the rest of you, stay tuned. We'll be back. Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org. That is preborn.org or financialissues.org and click on the Preborn banner.
Here at FISM News, our mission is to provide you with news from a source you can trust.
The news is a constant reminder that this world is not our home. It is marred by sin, resulting in wars, brokenness, and divisiveness.
Jesus promised that he will return soon to judge sin and make all things new.
Until then, we place our hope in him.
This is the good news, the most important truth we feel compelled to share.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. The call to surrender to Jesus is one step in our growth in holiness. And it doesn't just mean you give over a few things. It means he gets it all, including our finances, our investments. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues partner today. Learn more by going to financialissues.org/join. That's financialissues.org/join.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever he calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to the show, everybody. Thanks for joining us today. It's great to see you all. I'll take us the rest of the way here. Phone lines are open, 610-363-1110. I hope you'll join us for the conference call later today. As you just heard Shana mention, 1 o'clock Eastern Time, 12 o'clock Central Time. Hopefully you all received the alert with the call-in information. But yeah, 12 o'clock Central Time, 1 o'clock Eastern Time. Join us for the conference call. It's going to be a good one. And there's going to be a lot to talk about, of course, on that conference call. So I hope that you will make a priority to be there. Of course, it'll be posted on the website afterwards as well. If you can't make it live, we'll have it there for you immediately. Let's take a look at the markets here, folks, to open our third segment of the show. A little skittish yesterday as investors were waiting with bated breath as they've been all week for NVIDIA, which did report earnings yesterday. We'll get to that in just a moment. NVIDIA has become the source of all hopes and dreams, it seems, for the markets to report those earnings. So I have a quick story to share with you all. When I was about to confess my feelings for Megan the day before I graduated college, this was May of 2015. It was a Saturday. I was a nervous wreck the entire day. I was going to head to her house that evening to go to dinner with her parents. And sure enough, we had that conversation after dinner, taking a walk through her neighborhood. As it turned out, I had nothing to worry about. She reciprocated those feelings. And 6 months later, we were engaged. And 6 months after that, we were married. But regardless of that, that day, I was worried sick. I was worried so much. My knees were knocking. I was nervous about something that in the long run, I didn't need to be nervous about. But because it was looming, I was so worried about it. I think that's a little bit of what happened with the markets yesterday, to connect it to somewhat of a silly example. By midday, the indices were all strongly negative. The tech-heavy NASDAQ was leading the way down. They were worried. They'd pinned all their hopes and dreams on NVIDIA. And sure enough, by the closing bell yesterday, that's how the markets ended. So the Dow Jones was down about 0.4, the S&P 500 down 0.6, and the NASDAQ was down well over 1%, about 1 1/8 percentage points in the negative. The pre-markets came back somewhat positive this morning, and they're currently opening in positive territory as we speak. Let me just refresh my screen here. Yeah, everything pretty strongly positive. Now, all eyes were on that NVIDIA earnings report yesterday, and of course, NVIDIA's second quarter results surpassed Wall Street's expectations. So NVIDIA continues to succeed. Companies are clamoring for the tech giants' chips with the AI stuff. This AI data just more than doubles in the period. That continues to be what's driving the markets upward. However, shares of NVIDIA were a little bit down. The company's stock has been up more than 150% this year, and it's the S&P 500's top performer. It seems like investors may have wanted a little bit more. So it was up 152% to 68 cents versus 65 cents expected. The revenue was up 122%. The current quarter outlook revenue of $32.5 billion at the midpoint versus $31.7 billion. All good things from NVIDIA, but you just have to wonder, was it enough? And I think this kind of calls back to what we talked about a little bit yesterday on the show, that so much of Wall Street is pinning all their hopes on this one stock. And even when the stock exceeds expectations, a lot of people are still thinking, yeah, but we wish that it would have done even better. Very, very interesting. So shares were down in after hours trading. They closed about 2.1% lower on Wednesday. But nonetheless, the markets as a whole seem to be improving, and they're on the rise after that earnings report yesterday. Now, folks, to switch gears a little bit here, I have some great news for you. We mentioned this on the show yesterday. Many of you have heard that it seems that Lowe's has reversed course from its DEI policies. We talked about this headline on the show yesterday. I mentioned that Shana will talk more about it on the partner conference call today. We had a petition out, as you all know. We recently updated that petition to turn it into a letter of encouragement and support for this company. And that petition is now live on financialissues.org. I keep calling it a petition. It's not. It's really a letter of encouragement and support, thanking thanking Lowe's for turning course. Now, regardless of their intentions, maybe they just did it because they were exposed. Maybe they just did it to be able to make money and make a profit. That's all we want. We're not asking them to bow the knee to Jesus Christ. That would be great, of course. We're just asking them to make a good product and to get out of the DEI stuff and out of the woke stuff. So that letter of support is live on financialissues.org right now. I'm going to drop it into the chat for you all, and I want every single person who is listening or watching the show today to sign that petition thanking Lowe's for turning course from the godless agendas that they were getting involved in. That's really good stuff, and we're seeing some steam gained here, folks. We're seeing a snowball effect. Speaking of that snowball effect, another headline just broke yesterday. Ford Motor Company is now joining with many of these other companies in backing off of DEI policies amid conservative criticism. This news came out yesterday evening. Most recent corporation to scale back in support of LGBTQ inclusion. Ford said in a memo posted to social media yesterday, quote, "We made the decision earlier this year to stop participating in external culture surveys such as the Human Rights Campaign's Corporate Equality Index and various best places to work lists." They said that basically they're abandoning all this stuff. Now, the Human Rights Campaign is accusing Ford, saying that the company abandoned its commitment to hundreds of thousands of employees, saying the company was signaling that inclusion and other core values are no longer a priority in the workplace. Folks, this is great news. We are seeing the heart behind biblically responsible investing, which is really just we want companies to do what they do best. We're seeing this gain some steam here. And this is not a promise that Ford will ever come back on our list again in the future. It was once on our I think it was on our buy list years ago. It might have been 10 years ago, I think, that Dan took it off. It's not coming back anytime soon, of course, but this is great news. This is great news. And so we need to continue this. We need to continue pushing the biblically responsible agenda over and against the agenda that has been in corporate America for so long. Folks, it's working. It's working, and that's great news here. So I'm excited for this. I hope you're excited as well. Before we get to the Ag Report, a couple more headlines to get to. It appears that America could see an exodus of Gen Zers quitting their jobs. Nearly half of Americans are planning to leave their jobs in the next year. That's according to a Bankrate survey from this summer. Gen Z is leading the charge of this. Gen Z represents the largest share of this group, about 39%, saying they plan to quit their jobs this year compared to 25% of workers who said the same. Now, I'm curious a little bit what the cause of this could be. I wonder if it's simply a job change. Could be that, absolutely. Could be seeing maybe a growth in entrepreneurialism. I know we've seen that a lot with Gen Z. In fact, some of my own Gen Z friends, they're a little bit of an inspiration to me because they're starting their own businesses and doing crazy stuff like that. And I'm just like, wow, that's really impressive. You know, my hope is it's not worst case, which is entitlement, which I know that not only Gen Z, but also my generation, the millennials, has some serious bad cases of that. Hopefully it's not that, but just an interesting headline here that I thought I would share with you all. Last thing here to get to before the ag, 82% of Americans consider delaying retirement. So they're considering delaying retirement due to financial reasons. 92% worried that they'll have to work longer than they planned. It's according to a new survey. 64% of respondents said the thought of retirement is scarier than getting a divorce. Wow. 61% said they fear retirement more than they fear death. Interesting. 82% said that inflation has significantly curtailed their ability to save for retirement. Folks, we say this often on the show. It is never too early to begin thinking about retirement and saving for retirement. I would urge you, consider listening to Wednesday and Tuesday's shows. We talked a little bit about this in the first couple segments of those shows. And Lord willing, we'll try to talk about it more perhaps tomorrow or into next week. Consider listening to those for more information on this and some great wisdom from Shana. Right now, we have the Ag Report coming up here, and then we will be back with more financial issues right after that. Stick with us.
This is Craig Haugaard with your Financial Issues Ag Update for August 29th. Corn and soybean futures closed lower as they are pressured by improving weather forecasts for some of the major growing areas in the U.S., as well as fund selling. Traders hoping to see a good export program for corn out of the Gulf are concerned by low levels on the Mississippi River. We've seen some barges grounded, and the river is closed at mile marker 775 until further notice. At the close, December corn was 2 cents lower at $3.90 3/4. Soybeans came under pressure as traders focused on yield projections that seem to keep increasing. The markets were also pressured by a report out of China that the Chinese government gathered the top grain importers and urged them to purchase less foreign grains. They believe they have plenty of domestic supplies and expect weaker demand. As a result, November beans were 9.5 cents lower at $9.77 per bushel. Wheat markets rose on follow-through buying, short covering, and lower than anticipated Canadian wheat production numbers. Stats Canada estimates that the total wheat crop for that nation will come in at 34.4 million metric tons, while the average guess for Canadian wheat production was 35.1 million. We had Minneapolis December wheat 9.5 cents higher on that news, closing at 5.83 3/4. Kansas City rose by 9 cents to close at 5.55 3/4. Chicago was 6 cents higher at 5.41 1/2. Cotton futures fell in response to a stronger U.S. dollar. At the closing bell, we had December futures down 143 points as they settled the day at 68.55. Livestock futures were mixed. October live cattle were 77.5 cents lower at $178.62 per hundredweight. October feeder cattle were 20 cents higher as they settled at $238.57 per hundred. October lean hog futures were down 40 cents at the close, ending the session at $81.67 per hundredweight. Class 3 milk futures were hit by a round of profit taking during yesterday's trade. At the closing bell, we had September futures down 41 points, settling at 22.17. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
In a world where financial decisions can feel overwhelming, it's easy to lose sight of what truly matters. But what if there is a way to align your financial goals with your deepest values? Financial Issues has helped us navigate the complex world of finance through a biblical lens. By prioritizing and investing in a way that honors God, Financial Issues has empowered us to focus on what truly matters: our family, our faith, and our future. With Financial Issues by our side, we can invest knowing that our financial decisions are in line with our values. Take the first step today and become a Financial Issues partner to access rich online resources, training tools, and guidance for biblically responsible investing. Head over to financialissues.org and learn how to invest your money in a way that honors God. That's financialissues.org.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, just a reminder, conference call later today, 1 p.m. Eastern Time, noon Central Time. Also, I appreciate Shana mentioned Bible study earlier in the show. I hope you'll join us for Bible study tomorrow, 6:30 Eastern Time, 5:30 Central Time. We're in the middle of 2 Timothy. After 2 Timothy, we will be beginning the book of Daniel. I'm actually reading through Daniel with my wife now. A little bit of preparation for that, so you can pray for me. That is a tall order and one that I am a little bit nervous about, but it's going to be fun. We're going to have a good time. So I hope you'll join us Friday morning. Every Friday we meet 6:30 a.m. Eastern Time, 5:30 Central Time. For anyone, you don't have to. You can be a partner or not a partner. It's free to join. You can invite anyone you want. It's a great non-threatening way to study the Bible. So join us tomorrow. All right, Grant. Let's before we get to Pete's question, take a look at the markets here. Everything's still positive. The Dow Jones right near the flat line, but the S&P 500 is up 0.3, almost 0.4% actually, and the NASDAQ is creeping up towards 1 full percentage point as we open the day here. Okay, Grant, let's get to Pete's question here.
All right. Well, Pete asks from Seattle, it seems like we're always in earnings season, quote unquote. As soon as we finish hearing the last reports of one season/quarter, they start talking about it beginning all over again, and then it does. How long does it take for all companies to report, and how much of a break is there between earnings season reporting? It seems just like days.
Pete, that's a good question. I appreciate hearing from you, buddy. And I'll do my best to take a stab at it. Your first point, you are correct. Exactly right. It does seem like we're kind of always in earnings season, doesn't it? It comes around pretty often. You know, I get a similar feel to it whenever Sunday night comes and the weekend ends and it's time to go back to work. And I'm like, gosh, I was just here. Like the weekend just started, you know, now it's time to go back to work again. Like we were just here. The reason for this actually is because earnings season is both cyclical, just like the weekend, and it's also somewhat long. So it's longer than we might think. So let me give you an explanation quickly of the kind of the calendar, the market calendar, earnings calendar. Each year is split into 4 quarters, as you probably well know. So quarter 1 runs from January 1st to the last day of March. Quarter 2 is April 1st to the last day of June. Quarter 3 is July 1st to the last day of September. We're in that right now. And quarter 4 is October 1st to the last day of December. Now, earnings season follows behind at kind of a delay of about 2 weeks to 6 weeks or so. So it's up to about a month and a half. Goes as follows. So the quarter 1 earnings season, which ends at the end of March, quarter 1 ends at the end of March. Earnings season begins about 2 weeks later. So mid-April through the end of May. Quarter 2 earnings season begins in mid-July and goes through late August. We are actually at the very end of quarter 2 earnings season right now. Certain companies report early on, but other companies like NVIDIA tends to report a little bit later. That's its schedule among the last in line. So it kind of almost feels like it extends earnings season out a little bit, because if you've got these no-name companies that are reporting, we're not going to talk about those, but NVIDIA, as most people have said, the world's most important stock, as they call it, one of the last to report, so it extends it out a little bit. So we really kind of just finished the quarter 2 earnings season. Quarter 3 earnings season runs from mid-October through late November, end of November. And then quarter 4 earnings season is the following year from quarter 4. It runs from mid-January through late February. Kind of how that works. So you add that up, Pete. I was talking to Grant about this just a moment ago. It's 6 months of the year we're in earnings season. 6 months of the year. It's a long time. So it does feel like a lot. I mean, it's half in earnings season, half not. It's kind of half on, half off. And I agree with you. It does feel like a long time. We're finishing up quarter 2 earnings season, but remember, we're already 2/3 of the way through the 3rd quarter of the calendar year, meaning we only have one more month of quarter 3 until the end of September comes. And then once the end of September comes, 2 weeks later, earnings season for quarter 3. Earnings season starts again. So we'll be back full force once more. So yes, I agree with you. We're in earnings season often, and oftentimes it does feel like just days between when we talk about it. Your question, how long does it take? That delay that you mentioned, it's from the end of the quarter to the beginning of that quarter's earnings season. That's kind of what gives companies the time to get their numbers in order, basically. So they can't just report earnings as soon as the quarter ends. They need a couple of weeks to actually get their numbers in order before it goes to the public. And as we said earlier, you know, different companies have different call dates. Some of the other Magnificent Sevens, they will report a good bit earlier in earnings season, maybe the 1st or 2nd week in. And then NVIDIA is one of the ones that reports later, obviously 5 or 6 weeks in. That's kind of how it works there. You know, earnings season is a big deal for the markets, folks, and I think we need to make sure that we're not forgetting this. We've seen this with NVIDIA this past year, that seems like investors are just hanging on every word, everything that company points out. They're just hanging on to it, kind of waiting. So it makes sense that a lot of investors are keeping their eyes on earnings season. And so you'll hear us talk a lot about that on the show, not to necessarily join in that, but more just to give you a sense of what is happening on Wall Street, because that helps us to be able to make sense of what's going on in the entire sphere so that we can see what to do with our own portfolios. Hope that makes sense, Pete. You know, just as a wrap up here for us, I think it's good for all of us to have a pulse on what's going on. You know, we have a similar viewpoint when it comes to the regular news cycle. It's good to be able to read a little bit of the news to know what's going on. But I would caution all of you to not dig your nose too deep into it and to not get so swamped by it that you're becoming despairing, or that you're thinking, oh my goodness, the world is going crazy and I don't know what's going to happen, that it takes your trust off of God. It's the same with the markets as well. We don't want to be swayed by these earnings reports. We don't want to be swayed by what happens even yesterday. We don't want to be swayed by it. We need to keep an eye on what's happening, for sure. That's called wisdom. But sticking with the long-term strategy of weathering the storms is, I think, even more important. And so you'll do a great job if you're doing that. But Pete, it's a good question. I appreciate you asking. It's one that I've wondered as well. But that's kind of why it seems like we're always in earnings season, and it sure does. So good question there, brother. A couple more headlines to get to here, folks, before we sign off for the day. Home Depot, which is not biblically responsible, apparently partnered with this HRC, this human rights campaign, on elementary school gender curriculum that taught kids about pansexuals. Now, if you're wondering what in the world does Home Depot have to do with teaching children about sexual deviancy, you are correct in wondering why. I have no idea, other than to continue to cultivate this godless agenda. So more and more companies, as they're abandoning these woke DEI practices, Home Depot has come under the spotlight. A Fox News business report revealed Home Depot partnered with the HRC's Welcoming Schools program, basically a program that indoctrinates children into transgender ideology. The K-12 curriculum includes teaching elementary school children about pansexual and non-binary gender identities. The HRC, again, we've mentioned this Human Rights Commission, it describes the Welcoming School program, quote, as the most comprehensive bias-based bullying prevention program in the nation that includes, quote, LGBTQ plus and gender-inclusive professional development training, lesson plans, book lists, and resources specifically designed for educators and youth-serving professionals. Back in June of last year, the HRC declared a national emergency for members of the LGBTQ plus community, citing, quote, a tidal wave of increased homophobia and transphobia. That was a mouthful. But what we're seeing here, obviously, of course, is a non-biblically responsible company completely going out of its lane, trying to cater to a relatively small audience. And really, I think what they're doing is abandoning their main audience. And my hope and prayer is that Home Depot also will be exposed, just like many of these other companies have rightly been exposed to. Folks, there's a couple lessons we can learn from this. One that I want to point out here is this HRC, which, I'm sure we'll be talking more about this HRC committee in coming days because it's been a bigger and bigger deal for us. It used the language of a tidal wave of increased homophobia and transphobia. We have to be very cautious and clear about the use of language. Language is important. Words mean something. When they say increased homophobia and transphobia, it sounds like, something that people could get behind and saying, yeah, we need to put a stop to that. We don't want people to mistreat gay people or any of that stuff. Christians have never said that we should mistreat homosexuals, though. What we have said is that the scripture is very clear about what is true and what is not true and what is right and what is wrong. And so we're going to stick with what is right, and we're going to protect our children from being taught these sexual deviancies. The other side sees that and says, you are a bigot. And so that's what they'll call us. We have to be very careful to be okay with being referred to in this way. Because what they're really saying is, I don't like what you believe in. And I don't like the God that you worship. And I think that's what's really important that we have to remember here when we see things like this. Well, folks, I do think that we'll be seeing more and more of this in the coming days, and I'll bet that we'll be talking about this tomorrow on the show and on the conference call as well. Last headline to get to before we close the show. U.S. mortgage rates are dropping again to the lowest level since April 2023. This picks up from something Shana talked about earlier in the show with the housing market. Mortgage rates fell again last week. They're actually down now. The average contract interest rate for a 30-year fixed-rate mortgage with conforming loan balances is down to the range of 6.4 to 6.5%. Rates have actually come down more than 80 basis points from a year ago. But as Shana mentioned, this home affordability crisis is still really tough. The median price of a resale home, it's right in that $430,000 range, as we mentioned earlier on the show today. There's lots to consider when you're investing in real estate. We still believe it can be a good investment, but you have to make sure that you have the willingness to do it. You have to make sure that you can carry that rental property as well without necessarily the promise of rental income, especially if you're going to do it in a day like today where prices are high and interest rates are high as well. Well, good show as always, folks. Hope to see all of you on the conference call later today. And remember, everything that you have belongs to the Lord. Let's be found good and faithful stewards with the money that God has given to us. God bless you all. Great to see you today for the program. And Lord willing, we'll do it again tomorrow for Rapid Fire Friday. Until then, I'm Seth Udinsky signing off, and we'll see you then.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FBISM production.